Hello everyone, hope you guys had a fantastic day. We sure did. We had a bunch of really good trades. In today's video though, we're going to be talking about the SPY, the NASDAQ, the IWM. We're going to take a look at Microsoft earnings a bit. We're going to take a look at the bonds, the VIX, the dollar, maybe even a little Bitcoin. So without further ado, let's get started with the video. Bit of a misleading title here. Microsoft beats earnings when it clearly didn't really beat earnings. They failed, right? They didn't do that well, but the only thing that did do well was basically their cloud services. So the cloud services beat estimates, so that is good. Also, like I was saying earlier, Microsoft took a majority position in OpenAI. OpenAI is the company that owns ChatGPT. ChatGPT is now They are now trying to implement ChatGPT, which is basically you type in something and it auto generates a prompt and it answers your question and it answers you in a prompt using artificial intelligence. So Microsoft is applying that to their Bing search engine, which they are trying to basically overtake Google in doing so. So Microsoft has a lot going on, and it has a pretty interesting future as a company. So once again, when taking a look at the earnings calendar for this week, we can clearly see that Tesla has earnings tomorrow after the close. We have Boeing and AT&T tomorrow morning as well. And then Thursday, we have Intel, Visa. So it's a continuation of tech stocks and more economically sensitive stocks. We had Logitech, and then we also have basically Intel is going to be a very important gauge of how AMD and NVIDIA earnings can go as well. So yeah, it's going to be very interesting, especially to see how Tesla does. But generally, we do see a run up into earnings. Generally, it makes sense to be bullish heading into earnings. And then what happens afterward is a complete, it could be a complete fake out. So yeah, there's that. So now let's take a look at the charts. It's very important to be pragmatic when we take into account what's going on in the market. All right, so the 30-year bonds, we know, have a bit of a correlation to the overall market. So if the bonds are doing well, the stock market also does well. Cool. Now, when looking at this setup, we can clearly see that this is a good bounce so far, right? And we know that the bonds don't always show, and the strength or the weakness in the bonds don't always show until we get clear-cut strength above prior levels of resistance or weakness below prior levels of support. Okay, so one of the most important things that I want to take a look at here on the bonds is clearly bullish candle structure, while the MACD is still below. So when the MACD is oversold like this, that means that the MACD, the blue line, can still cross above the yellow signal line here. And generally when that happens, that is considered a bullish crossover. So the fact that we are getting this bullish move in the bonds while the MACD is still pointed lower, that is very bullish. Okay, so we have to be pragmatic in our analysis. The bonds technically look bullish, right? We can clearly see that the RSI is already starting to cross above, whereas the MACD has not even started to shift its direction. It's still pointed down while the bond price is moving up. So that is generally very strong. And that is the first thing that I want to take a look at. The next thing is the VIX. So we know that the VIX has an inverse relationship to the market. So if the VIX is falling, then the stock market should be doing well. The stock market is strong when the VIX is weak, okay? Same concept here. The VIX looks very weak. Clearly bearish candle structure, right? When taking a look at the MACD is pointed lower in accordance to the direction of the VIX. And as it's pointed lower, if we get a cross down below, that is a bearish crossover. So that means that there's a lot more room to fall on the VIX. And if there's a lot more room to fall on the VIX, that means there's a lot more room to rise on the stock market. So currently, immediately from what I'm looking at right now, the VIX looks bearish. the 30-year bonds look bullish so far. And now when taking a look at the dollar, we know that the dollar also has a bit of an inverse relationship with the market. If the dollar is strong, then the stock market is weak. Okay, so currently, right, we have a bullish crossover on the MACD. Price is still holding above, but the way that I'm looking at the dollar is it's very, very heavy. The momentum is still not completely falling, right? It's not, it hasn't just let go and completely started falling. It's trying its best to remain above, and it's basically very, very heavy. We can see that the MACD is crossed above. It should have a bullish momentum upwards and everything, but it's very, very difficult at the moment for the dollar to do that. And but the main thing is we're holding above these wicks down below. So we're still holding above all of these wicks. We have not had a solid close below any major level of support. So it's going to be really, really interesting to see what the next few days on the dollar have in store. It's really tough for me to say which direction I think it's going to go. But pragmatically right now, if we get a continued, honestly, if we just get a continued amount of buying pressure, the main goal for a strong dollar, from a technical standpoint, is if the MACD starts to really, really overshoot. So the MACD is going to need to really, really overshoot this blue line, right? As the blue line really, really begins to overshoot, it's going to average out the yellow line to start slowly catching up. So similar to basically what happened basically back here. You can just assume that this yellow line was more flat, right? And as we started to really, really skyrocket, the yellow line started to move up as well. So that is the only thing that would be bullish really for the dollar. We just need a lot more buying pressure. We're having enough buying pressure that it maintains above levels of support, but we're not getting enough buying pressure for it to start breaking above levels of resistance. And this is the first, I mean, this is, if you're a bull on the dollar, this is what you really want to see. But it's not an automatic reason to be bullish on the dollar, and this is not an automatic reason to be bearish on the stock market. It's just one data point that we're taking a look at. So now that we took a look at all of that stuff, it's important to take a look now at the SPY, the NASDAQ, and the IWM. So number one, right off the bat, the MACD on the SPY crossed above its the signal line, right? So generally when we get a crossover, at least the next 1 to 2 days should also be bullish. Generally that is the case. We clearly see a bullish pattern here. We see bullish momentum here. If we stagnate, it should not last long. So for bulls, right? For bulls on the stock market right now, tomorrow we should start really breaking above today's highs and potentially even test or break above the highs from Monday, January 23rd, right? So if it doesn't happen tomorrow, then basically we need to see some sort of bullish structure being created because the momentum is there. This setup is basically perfect for this to happen. And now is tomorrow and the day after tomorrow are going to be really, really important times for them to maintain this upward pressure. If they can maintain the upward pressure, and basically I'm assuming that we should break above in the next 2 days, purely based off of technical patterns and everything. But the easy trade, right, is depending on how we open tomorrow, right? The easy trade is to buy short along this high here, right? For longer term, something like a few months or whatever, right? Something safer that you're less worried about, right? And then as we break above, you can go long with a scalp. If we break above this 402.65 level within the next 2 days, then this buying pressure should continue upwards, because at the moment we could also see that the Bollinger Band is pointed straight upwards, which means that the upper standard deviation of the SPY is increasing. So for us to become overextended to the upside, it's going to take a lot more. So we can have really, really sharp moves, and we still technically won't be overextended to the upside because the Bollinger Band, the standard deviation, is also rising sharply as well. So with that in mind, with the MACD also crossing above, this is we should see, like, I'm going to be leaning bullish most likely tomorrow and the day after. Most likely tomorrow I'm going to be leaning bullish, even intraday, day trading, etc., etc. We're gonna have to see how futures open and everything like that. But yeah, so far the SPY looks very bullish. So the NASDAQ, obviously the NASDAQ did not just cross above. It crossed above a few days ago, right? And we've been trading above the MACD for quite some time, and the main reason is for that is because the past few days the NASDAQ has been leading. So whereas the IWM was leading, right, to end the month, the NASDAQ started picking up its slack, and due to, you know, Tesla, the chips, all of the other large tech stocks, the NASDAQ started leading and helped bring the SPY up, the SP500 up. So that's why we're much further away on the MACD than we are on the SPY. And basically, once again, I mean, this looks very, very clearly bullish. We are showing much more strength on the NASDAQ than we are on the SPY. And if this strength can continue, and if this high gets broken on the NASDAQ, we can also go long. And that's another pretty solid trade opportunity in my opinion. We can also see that the upper level of the Bollinger Band is also increasing sharply in the same way that the SPY is. And things are looking overall pretty strong. We're holding support. This could just be a continuation pattern, and just look for a break above this high here from yesterday. And then the bigger story here is the IWM. So the IWM led the market earlier on, right, in the month, and you can see that the MACD is still not even close to crossing above. So there's still a lot more upside potential on the IWM, because currently the MACD is technically oversold, right? When it's trading above, when the blue line is above the yellow line, it's overbought. When it's trading below, it's oversold. So when we are oversold, that means that there's a lot more upside potential. And especially when we get two crosses above. When we get a cross above, we usually get 1 to 2 days where we continue upwards. So the IWM clearly looks bullish. If the NASDAQ can continue showing strength, then the SPY is going to continue showing strength. The IWM is going to continue showing strength. Clearly, once again, you know, a break above this 188.50 level, and especially above this 189 level, it's going to be a pretty good scalp to the upside. But I would be leaning more long on the SPY or the NASDAQ than the IWM, since a lot of the money that's being flown is being thrown into tech stocks, essentially. So we can clearly see on all of the equities and everything, the setup looks pretty bullish. And yeah, I mean, the setup looks bullish on SPY, the IWM, the NASDAQ, the bonds. It looks bullish for the VIX as well. The dollar is the only thing that is showing some sort of signals that there's something to be worried about. But everything else pragmatically looks solid. Like it looks bullish. It would be very, very, I mean, it's much easier to be bullish on the SPY and the NASDAQ once we get these highs broken. For now, you can go short with this high basically as a stop loss. As soon as we break above, then, you know, this should really start to, like, it's this explosive power. It looks like we can see like 407 to 408, but this level is going to be the main level, honestly. But it becomes much easier to be bullish above this high here. So I hope it made sense. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.